So today's video is going to be on the subject of taxation, and specifically, how do you fix a tax system? So this is a conversation that's typically had during political races and or sort of around the world on how do we make our tax system better? How do we make it more efficient and fairer? And so today's video is going to sort of break down some ways that actually can take place in a country. And so what we're going to start off talking about is one of the less effective ways to actually generate tax income, and that is through income tax. So what happens with income tax, as you start to raise it higher and higher, it has diminishing returns. And after a certain point, typically around the 50% mark, a country actually starts to generate less tax income as they increase it further beyond that point. Why? Well, what happens is the ultra-rich in a society, the people with hundreds of millions and billions of dollars, they say, whoa, we're not going to pay this. And they go and find professionals who can hide their money offshore. They seek out loopholes that allow them to get around these regulations. And what happens is, it is very time-consuming and very costly for governments and countries to go and find these individuals, to prosecute these individuals, and then actually get the money back. It is after that 50% mark, countries typically will actually start to lose money when it comes to generating tax income. And it also actually hurts sort of the individuals like doctors, people with small businesses, architects, engineers, people who do earn a considerable amount of income, but they don't have the option to find these tax loopholes. They don't know how to do that. And they've spent years in school, years developing a business, and they get punished by these high tax rates because of how much income they make. So, income tax is a very ineffective way to actually make money for a country. So, how do you improve a tax system? The first way is to actually spread out taxes. You don't want to have one area that is incredibly expensive. You don't want to have a very high income tax and then nothing else. You want to spread it out across a number of different areas. It's far more effective and people are far more willing to pay those taxes. So have a modest income tax, some sales tax, property taxes, luxury tax. You spread it over a wide variety of areas and people are going to feel more comfortable paying those, and it's going to be easier for people to pay those as well. So that is the first way. The second is by simplifying the tax system. This should be common sense, but the reality is most tax systems in the world are incredibly complicated. I have spent a lot of time looking at the Canadian and American tax system to create content for the Finances Done Right app, and ultimately they're both pretty awful. They have a lot of stuff in there that just isn't necessary, and you go, who's even going to use this? Why do you include this? It's just unnecessarily complicated. And by removing all of the sort of fluff and unnecessary things, reducing the complicated aspects of it, so many more people are going to be willing to pay their taxes and are going to be happier about paying their taxes. They're not going to be frustrated as much, and it is a far more effective way to actually generate tax income. I think a common misconception about people who don't pay their taxes is people think, oh, they're just greedy individuals who hate the government. And the reality is some of them might. Probably a decent portion. But the vast majority of them are individuals who just look at the tax system and say, that's way too complicated. I'm not interested in doing that. No, I'm just not going to pay my taxes. And that's probably a significant portion of individuals who don't pay their taxes. That's sort of the sentiment that motivates them to do that. And by simplifying their tax system, it will make it easier to pay taxes and they'll probably generate more. And then the third area, and this is sort of getting into how do you actually tax the ultra-rich individuals of a society, and you do that through consumption and estate taxes. Now, I know a lot of individuals hear the word estate tax and they go, ooh, I don't want the government taking money that I've already paid taxes on. And I agree 100%. That is something that they shouldn't do up until a certain point. And the specific situations I'm talking about are individuals, those ultra-wealthy, that earn hundreds of millions of dollars, billions of dollars. And what they do is they keep that money, they accrue that money, and then they pass it from generation to generation to generation. And the reality is the original individual who created that company, who made all of that wealth, they paid their taxes on it, that's great. And 100% they should have all of that money. But when they decide to pass stuff to Junior and any of the other children, ultimately those children have not earned that money. And so an estate tax works like you have a certain amount, let's say $5 million, that you give to your children where they don't have to pay an estate tax on that. Then after that certain point, let's say you want to give a child $100 million. Well, the $5 million won't have the estate tax, but the rest of it does. And that is a very effective way to actually generate tax income from the ultra-wealthy. And it's a very effective way, and ultimately it's far more effective than income tax. And again, I just want to be clear. If, say, you're a firefighter, a nurse, or some other professional who spends their life saving up their money and wants to give that off to their kids, that's 100% good, and you should be entitled to give that amount. I'm talking about ultra-wealthy. That is where an estate tax is appropriate for people who make tens, hundreds of millions of dollars. And then with consumption taxes, what is a powerful thing with consumption taxes is they actually do something that governments really want to do, and they reward savers. People who save money, who put it aside, invest it, they benefit from a consumption tax, because ultimately you would lower an income tax and then increase a consumption tax. And so this benefits individuals who are being responsible with their money, and then individuals who decide to buy new cars every month or whatever it might be, those people have to pay a tax on that because they're not being responsible with their money. It is a very actually effective way to collect revenue, and it actually has an added benefit in the effect that it rewards people saving for retirement, for education, for whatever reason it might be. And then sort of just a little caveat to consumption tax is actually something that's known as a luxury tax. And this is a tax that you add on to certain items that are, so let's say an individual is buying a $200 million yacht. You would add a luxury tax to that because that person is incredibly wealthy and they're just throwing money at something, and that is another effective way to actually tax the wealthy. You add it onto ridiculous things like $100 million yachts, $500 million homes, whatever it might be. I don't think there's any $5 million homes, but you sort of get the point. That's a more effective way to generate tax revenue for a country. So if you like this discussion, I'm going to actually include a link in the description to an article that discusses more techniques and ways that countries can actually generate tax income in effective ways. It's talking things about like Japan, who has more or less automated the vast majority of their tax collection system, and sort of touching on different areas that can benefit from that. And moving forward, I'm probably going to do that for every video, include a couple articles or links to content where if you want to learn more about whatever subject I'm talking about, you can do so. And as always, if you like the content, please feel free to like, share, and subscribe. It helps me grow. And have a wonderful day.